Hey everyone, welcome back to Actual Investing. Today, GitLab Stock, ticker GTLB, reported their first quarter fiscal 2025 earnings. And the stock was initially up something like 6% after hours and has since fallen back down and is pretty much flat at the time of recording this video. So let's unpack the earnings and find out what's going on here and whether I think GitLab Stock is a buy now, as the stock has been beaten down quite a bit. If we look at the 6-month chart, the stock is actually down 11% over a 6-month period, and over a 1-year period, it has raised 33%, which is higher than the NASDAQ. But if we zoom out again a little bit more, we can see that the company's significantly down from their IPO price. So let's just jump into the earnings right away. What I do with any earnings report is firstly make sure that they met their guidance. So last quarter, they said that they would make $165 to $166 million in revenue this quarter. And this quarter, they brought in $169.2 million. So they actually beat their revenue guidance. And the nice thing is, they raised fiscal year guidance. So here's the last report. They expected $725 to $731 million in fiscal 2025 in revenue. And now they raised that to $733 to $737. So the low end of their new guidance is actually higher than the high end of old guidance. So GitLab is expecting revenue to be better for the year than they previously expected. Another highlight of this earnings report is that this is the first time that they have generated positive free cash flow in the first quarter. They did have operating cash flows of $38 million. So GitLab is free cash flow positive even though they are not profitable. The other nice thing is that their revenue was up 33.3% year over year, which is the same as it was last quarter, up 33% year over year. So growth is still going strong, and with the updated revenue guidance, they're expecting 26.7% revenue growth for the year, which is really, really solid, especially as a lot of these SaaS companies are seeing slowdowns in their businesses. You know, the old elongated sales cycles and macroeconomic headwinds that everybody's been talking about. Another highlight for GitLab is their strong gross margins of 91% on a non-GAAP basis. The company also talks about some of their SaaS metrics. Here, one thing that I like to look for is their net retention rate. It was 129%, which is great. That's actually above the industry average for SaaS companies. Net retention rate simply measures how much they're expanding their current customers. So a net retention rate of 129% shows us that on average, their customers are spending 29% more year over year. So even without acquiring new customers, they're able to upsell their current customers more and more. And I think part of that is due to price increases. They did just recently raise the prices of their offerings. So I think that has something to do with it. But still, the fact that customers are sticking around and paying those price increases shows that GitLab's platform is helpful and is useful. So now for the bad news. GitLab is still diluting shareholders quite heavily via stock-based compensation. So stock-based compensation is a way of retaining good employees and upper-level management by paying them in shares of GitLab stock. Why that's bad for investors is because that these shares are typically kind of created out of thin air. So what that means is if you're a GitLab investor, every quarter that goes by, the executives are getting paid in shares, and your shares are going to be worth less and less of the company because there's more shares being created. Imagine if you had a pie and you had one slice of that pie, and then all of a sudden the entire pie got a little bit bigger, but your slice stayed the same. You still have the same slice, but the overall pie is now bigger. So your slice of pie seems smaller in comparison. Does that make sense? Is that a good analogy? I hope it is. Anyway, what's going on here is that stock-based compensation is still rampant for GitLab. So this stock-based compensation of $42 million in the first quarter represents 25% of their revenue. So on their entire revenue of $169 million, they're giving away 25% of that in stock-based compensation to their employees. So I think that's why the market is still quite unhappy with GitLab. It's also a company that's unprofitable, even though they are free cash flow positive, and I think the market is really scrutinizing unprofitable tech companies lately. So let's talk about what GitLab does, and then we'll look at my spreadsheet to see if they are a buy. So GitLab calls themselves a DevSecOps platform. It stands for Development, Security, and Operations. Essentially, it's a software platform for developers to collaborate. Here on Simplilearn, they say that GitLab is a complete DevOps platform that enables professionals to perform all tasks in a project, from project planning and source code management to monitoring and security. Additionally, it allows teams to collaborate and build better software. So the problem that GitLab is solving is that in the olden days of software development, there would be multiple different platforms doing multiple different things. And GitLab promises to put everything under one roof, which makes collaboration between teams a lot easier. So GitLab software helps developers talk to each other and plan and manage and build software all in one place. Another thing that GitLab has going for it is that they offer these generative AI solutions. Oh man, this pop-up. I'm just browsing. Another thing that GitLab has going for it is that they offer these generative AI-powered solutions. They can help you build code using generative AI, which is really slick. So they're helping people save time and developers to save effort and energy. And what it's doing, according to GitLab, is kind of leveling the playing field so that newer developers can come in and do the work of perhaps a more advanced developer with these generative AI tools. Okay, so let's go over to my spreadsheet and see how GitLab Stock scores. So I've put in the new earnings data, and this is my growth stock spreadsheet. So if you're new to the channel, I rate on 4 different factors when I analyze stocks. Those factors are gross margins, and I use gross margins because a lot of times growth stocks are not profitable. Annualized revenue, which shows how much of the market the company has captured. Price to annualized sales, which shows valuation, and year-over-year revenue growth. With each of these 4 metrics, you can get a score out of 5, and then I aggregate that for a total score out of 20. My average is around 12, and GitLab scores at 12.3. So GitLab is still above average. What's helping them out is their very, very, very strong gross margins of 91%. There's really not much better than that, besides maybe ARM, which makes a lot of money from royalties, which boosts their gross margins. But anyway, we also have a very strongly growing company at 33.3% year over year. That is supposed to slow a bit. Next quarter, they are expecting 26.8% year over year revenue growth. So that's a bit of a drop off. However, 26.8% revenue growth is still pretty good, especially when you see companies like UiPath, which I talked about recently, that dropped their expected year-over-year revenue growth to about 9%. So GitLab still growing very strongly, about to hit the $1 billion mark in annualized revenue, hopefully very soon. What I don't like about GitLab is how much they're spending on their operating expenses. So SG&A, which is selling, general, and administrative, comes in at almost 90% of the company's gross profit. So between SG&A and research and development, GitLab is spending more on operating expenses than they're bringing in revenue. And I think the market's very critical of companies like that lately. Now, I'm not saying that GitLab should change this. A lot of times spending money on SG&A is good for growth stocks because that's what helps them grow. Included in SG&A is the S, which is selling. Things like advertising and putting the word out for their product are going to be really helpful for a company that still wants to grow and capture market share. And as we've seen, they are free cash flow positive. So every quarter that goes by, they're not burning cash anymore. The other nice thing is that GitLab has a wonderful balance sheet. Look at this. They have cash of $1 billion and they only have liabilities of $700 million. And this cash is growing because they're free cash flow positive. So every quarter that goes by, as long as they keep up on this rate, they're going to be making more and more cash. And this cash is great because it can help them to build the business. They can acquire smaller companies to help their AI software development offerings. They can buy back shares, which they've been diluting shareholders, so maybe they should start doing that at some point. And they just have general peace of mind for a high interest rate environment. They won't need to take on any more debt because they have such a strong balance sheet. So, back to the spreadsheet. Is GitLab a buy? For me, I don't own GitLab currently. It is a stock that I've owned in the past. I think GitLab is compelling right now. I'm not rushing out to buy shares. It's not looking like a screaming buy. The valuation is still somewhat cheap compared to some other SaaS stocks that have been beaten down lately. GitLab does have a lot going for it. It's growing, it's free cash flow positive, it has a great balance sheet, it has amazing margins, and it's seeing one of the lowest valuations that it's seen in a very long time. The stock is still very beaten down from their IPO, and yes, you could argue that they were quite overvalued at IPO, most companies are, but now what we're seeing is a much more reasonable valuation for GitLab. So while I'm not rushing out to buy shares of GitLab, I don't think it would be the worst thing to be buying right now, and I definitely will be keeping it on my watch list. If you are an investor with a long time frame, slightly high tolerance for risk, I think GitLab makes a lot of sense right now. And if you do choose to buy, I will not blame you a single bit. I'm liking what I'm seeing here. So even though I'm not quite putting my money where my mouth is here, I do like GitLab stock. I hope that this analysis of GitLab's earnings was helpful for you. I did try to get this out as quickly as possible. So if you like content like this, please hit the like button. Please subscribe to the channel if you're new. I think YouTube told me like 85% of people who watch the videos are unsubscribed. So definitely check and see if you're subscribed. If you're not, would love to have you on board. If you didn't like the video, if you'd rather see something else from me, please honestly dislike it and let me know in the comments what you'd rather see just so that I can improve. I'm still pretty new at this. And I think my next video will be some viewer recommended stocks to analyze. A few off the top of my head that people wanted me to look at are Upstart, FICO, Bloom Energy, and Snowflake. So all of those I'll be analyzing either in one video or in separate videos coming up soon. I didn't want you guys to think I forgot about those. I have a big list. Those are just a few that came to my mind. So that's probably going to be the next video, is some viewer suggested stocks. So if you like things like that, please let me know. And if you have a stock you want me to analyze, now is the perfect time. Leave that in the comments and I can hopefully get to it for the next video and maybe do a big viewer suggested playlist kind of thing. Anyway, thank you guys so much for watching. I hope you all have an awesome day.